in order for us to get information, you and I each had to put up $100,000 non-refundable
Right.
just to get the property under contract so we can see what the financials look
Right.
like.
We don't even know. We don't have the money to close, but we
Right. We didn't have the partners at the time.
Right.
We didn't know anything about the financials. We just knew the pricing was, too good to pass up. We closed at 29 million
29,
and we sold it and closed at 51
51. It's tremendous.
in 2 years.
I came to this country when I was 16 years old with zero in my pocket. And from there, I worked myself up. I knew what I wanted. You have to have a vision. And you need to have fire in the belly. Today we have Tal Frydman. Tal Frydman is a top agent in its field. He's worked from Numeric Realty, right, in Boca Raton. You closed 26,000 units over the years?
Yeah.
26,675 units over 3 billion?
3.1 billion.
$3.1 billion. This is what we call, okay, $1 billion producer, okay? Just to say it means nothing. But this is actual number. You guys can check it out, okay? Again, 26,000 units closed, over $3.1 billion in sales, okay? We're really proud of you, Tal. And right now you have under contract about almost 2,000 units, okay? Just under $400 million. So I highly recommend Mr. Tal Frydman. It's a real pleasure having you here.
Thank you.
You and me going back how many years?
Probably 20 years.
20 years. I met you. First time I met you, I believe, was in Homestead.
Probably.
Property in Homestead, yes.
Yeah.
You show me property there, right? And I know you. Now, you tell us about you. You were working for a Max Meal Shop.
Yeah, so I started back in 2000. And
2000. Before that?
just out of college.
Oh, out of college.
Yeah,
Right.
out of college, and didn't know what I was doing, so I figured I'd take the LSATs and try to go to law school, but did not even apply to law school, and ended up getting involved in real estate. And that was when I was living in Connecticut, and moved down here and started with Marcus Millichap. Had the best training in the business.
Oh, nice.
And I ended up being with Marcus Millichap for 16 years.
No, I understand you were top agent, though.
Yeah, was always one of the top guys, and had all the awards over there, which was nice.
Right.
And then from there, I got recruited to open up the investment sale division for Bracadia.
Very nice.
And then when I was at Bracadia, that's when I had your daughter as an intern and working for me.
Alana.
Alana was working with me at Bracadia, and for many years over there.
Right.
And then from there, I got recruited to team up with my current partners at Newmark. And now it's been almost 7 years that we've been partners together. And, we've been one of the top teams in South Florida for $25 million and up over the last 6 or 7 years consistently.
Right. So I understand, Tal, you're a top in your field, okay? And we always love to have winners. I like winners, okay? Does that mean I don't like losers? No, you can be a loser, but you have a goal in mind to go up. You acknowledge, it's like, imagine drinking alcohol, okay? That how can you, if you're an alcoholist, right? How do you acknowledge, okay, when to move on? When you admit your mistake, and then you get out of it, you go to a meeting, and then, you work out yourself as an alcoholist, right? As the loser, people that are losers, you were never a loser anyway. You were always a winner.
Thank you.
At your field. But I like winners. I like winners. We all like winners.
Correct.
Okay? And share with us the experience with... we did a deal together in Gainesville, right? How was it?
The Gainesville deal was a dream come true. It was a deal that I remember from the very beginning. You contacted me and said, "Hey, this residential broker, has these 2 deals in Gainesville. I don't know anything about Gainesville. Can you just look at them for me and tell me what you think?"
Right.
And so, which we do for our clients all the time. Right. And so, we ended up looking at the numbers and the properties and everything. And I came back to you and I said, "Yeah, these are freaking crazy deals."
Right.
The guy who owned the properties owned them forever. He built the properties back in the 70s. And you literally said to me, you said, "Listen, since you're not brokering the deal, because I was brought to these deals by a residential broker, why don't we just team up together and partner on the deals?" So you and I teamed up on the GP side. We brought in an investor, one investor with us on the deal.
And we killed it, right?
We not only did we crush it, it was during a time when 2020, as everyone knows, it was COVID.
COVID, right.
And so we had these unbelievable properties in Gainesville across from the school. And all of a sudden, the school shuts down.
Right.
Who would have thought when we bought these properties that we wouldn't have students living in our properties?
Right.
And so, collectively, and I give it to you and the staff, really, took initiative. Right. And instead of just laying low and feeling sorry for ourselves.
Oh, no, we don't do that.
We went in and got a whole new, we turned the property around from.
Remember, failure is not an option.
Right, exactly. And so instead of, we had properties where students were just gone. I mean, the
Right.
University of Florida shut down,
Shut down.
just like the rest of the world, and it is not unheard of. So, what we did, and the team over there, just went in and brought in a whole new tenant base
Right.
of just standard tenants instead of the students.
Right.
And before we knew, we got that property stabilized. We went in and upgraded the units.
Right.
And I remember specifically you and I speaking with our partners and saying, listen, we have options. Let's take a look at different options as far as a refinancing or a sale.
Right.
We got the refinancing numbers. We talked to a couple of different brokers up there and got proposals to see where the values were coming in at, and they both came in at the same numbers. And it was the time where we said doesn't make any sense not to sell it and take advantage.
I have a confession to make. Confession. I was not going to go see it, and first time we got the property in Gainesville. I'm looking. Okay, I'm going. Usually, what I do, the rule of thumb, you want to buy something 30 minutes from the airport. Okay, I'm looking. Yeah, it's 30 minutes, maybe 20 minutes from the airport. Sure, but original, very small airport, Gainesville Airport. Okay, very little airlines, not too many flights there. If they do, it's a very late at night or early in the morning. I think, okay, let me go to Orlando. Orlando, what? 2 hours away. Forget it, I'm not going. And you pushed me because I wasn't going to go. It's to go see it.
Yeah, I pushed you, and
I went to see it. So,
well, not only did we go see it, we were dealing with a seller that was very, very difficult. He didn't want to give us any information. And in order for us to get information, you and I each had to put up $100,000 non-refundable,
right,
just to get the property under contract so we can see what the financials look like.
We don't even know. We don't have the money to close, but we
right. We didn't know. We didn't have the partners at the time.
Right.
We didn't know anything about the financials. We just knew the pricing was too good to pass up.
Right.
And so you and I both put up $100,000 just to get that property under contract.
Right. Exactly.
And then we started going through it, and it became even better than we thought.
Oh yeah. You see, I always tell people, tell my viewer, my audience, okay, sometimes you got to put non-refundable.
Yeah.
It's painful, okay?
Yeah.
My lender referred to me as a cowboy because that one $100,000. Usually I put $500,000, $1 million. The last deal in Gainesville, almost $2 million, okay? It's a crazy, money you got to put up, okay, to earn the deal.
That was something that we just, we knew. The thing is, we knew the market, we knew the value of the property, and we knew the value and the pricing that we were getting the property for.
Right.
So for me, it was just like, there's no way that it could go bad.
Right.
Obviously, you never know for sure, but once we started digging into the numbers and inspecting the property, it became better than we ever dreamed of.
Right.
And then before we knew it, 2.5 years later, we ended up selling both those deals for just
I think not even, maybe 2 years later.
Yeah, probably
one of them was 1.5 years later, I thought.
That's right, because the seller didn't want to close on both properties at the same time.
Right.
So we had to close one in like maybe 2019, the other one in 2020. And then
basically, if you put in a nutshell, it was $30 million, right?
Yeah.
$30 million became $52 million.
Correct.
Nutshell.
Right. We closed at we closed actually more. We closed at 29 million.
29.
And we sold it and closed at 51.
51. It's tremendous.
In 2 years.
It doesn't get better.
In 2 years.
Well, it does. Yeah, in 2 years. So people always ask me, I know, but that was a good time. You can buy real estate now. Nonsense. It's never a good time or never a bad time to buy real estate. It's always has to do with the price point.
It has to do with the price.
To get a good deal, even though rates are high, you have to calculate the rates already in the deal.
Yeah.
It's deep enough in terms of price discount, okay, you're okay.
Right. And there's always situations, like for instance, this seller, you and I actually took him for a nice steak dinner in order to get the contract signed and all. And he literally told us, he goes, listen, I built these properties, I've owned them for, must have been 40, 50 years.
Right.
And he goes, my kids want nothing to do with the business and real estate. So, my only option right now is to sell. And you and I were just in the right position at the right time to get it done.
Right.
He liked us. We took him out for a nice evening.
Oh, yeah. You have to massage him. Sometimes you have to massage the sellers. It's okay. There's no crime.
No. And before that, he wasn't giving us anything. After that dinner, within 5 or 6 days, we had a contract signed. And he opened up all his paperwork and his
people. After that, broker called me up and said, how'd you get it?
Right.
His name was Jack. He's very stubborn old man.
Yeah.
Okay, he never get information. He never wants sale. Okay.
Yeah.
And that was a great one.
That was definitely one
for the book.
That was definitely one that we'll never forget. Yeah, there's a great option.
So you're with the Newmark Realty, right? What's the difference between Newmark Realty, right?
Newmark.
And Max Milchap, in a nutshell.
You know what? They're both national firms. They're both publicly traded companies.
Mm-hmm.
The stuff that we specialize in is $25 million and up.
Yeah, I think you're definitely doing bigger stuff.
Yeah. So our minimum is, even though it's $25 million and up, I would say our smallest deal going on right now is in the mid $30 million range.
Right.
You know, that's the least expensive one we have, and they go all the way up to, you know, brand new construction of, you know, being well over $100 million of deals. And that's the only difference. You know, I mean, listen, Marcus was unbelievable to me, you know, and you know, that's where I got my start. I didn't even know what a cap rate was when I first started with them.
Right.
And you know, I'm still very close with a lot of friends over there.
Oh yeah, of course. But
And you know, and the
that
good
was the
thing,
best move for you.
yeah, and the good thing is we never compete. You know, we don't compete on deals because of, you know, the deals that they specialize in compared to the deals we specialize in are totally different. So you know, my friends that I have in there, we talk all the time, and like I said, it's great because we never compete. If we had to compete, it'd probably be a different relationship.
Be
But
different, probably.
there's no competition really.
competition.
Yeah.
Right. But you guys are focused on South Florida, right?
Yeah.
The two teams in Florida, right? South and Central.
Yeah. Well, three. I mean, we have our team in South Florida. We have another team in Orlando, another team in Tampa, and another team in Jacksonville.
Oh, Jacksonville too. So Ryan Moody is with Tampa.
Moody's in the Orlando office. But he handles all the, you know, private capital deals for really Orlando, Tampa, and obviously Jacksonville, because he was the one that sold the properties for us.
Right. So you guys collaborate together?
Yeah, I mean, we're separate teams, but
separate team.
Yeah, but I mean, every week we're on the call with the entire state, you know, talking about all the deals that we have going on as far as proposals and listings and under contracts and clients that we're meeting with, just so we all know. And then, like, for instance, if I have a meeting with a particular client and a guy from Tampa or Orlando knows about that meeting, they say, hey, can you mention a deal that we're working with them on as well? And we'll bring that up in our meeting and kind of update them on that.
And how do you see now? Now you multifamily only, right?
100%.
That's the way to go.
Yeah.
That's why I tell my audience, multifamily is the way to go.
100%.
You know, I got a call one time, my partner, you know, the Chris Prasad, right? Years ago. So listen, you want to make money? Yeah, I want to make money. No. Sell everything. Going back 7 years ago.
Yeah.
Get involved in multifamily. That's it. Multifamily, take it to the next level.
Yep.
That's why I'm preaching. Next level, you know.
Yeah.
Podcast, okay? And you know what? It takes you to different places because your return is so much higher. Rent goes up every single year.
And speaking of that client, we just sold his property for him in Plantation that we closed in December.
Oh, you see, which one?
Nottingham Pines.
Oh, no, okay.
So Nottingham Pines, I sold to them 2 years ago for $45 million.
Right.
And then we just closed in December for $57 million.
What about the one with Grand Island?
Which one?
Grand Island.
Grand Island, yeah.
That's also going to be so.
Possibly, yeah. We had insurance issues before on that one, but eventually that'll be another sale that they'll do. But it's a great property that they're.
What do you see? What do you see right now? Price per door in South Florida. I focus mostly Central and North Florida.
Right. You know what? It all depends on the deals. For instance, you know, we traded the deal in Plantation, which was 1980 construction, and that deal traded over $270 a door.
$270.
Over $270 a door.
When was that? Recently?
December.
Wow. What was the average rent?
You know what? They had very high rents because of the location. It was a phenomenal location with a Starbucks and a sushi restaurant directly across the street. And so it was on the hard main corner of a major intersection. And on top of that, they had assumable loan at 4.5%. So with that,
down payment.
Right. So listen, the sellers made out unbelievable on the deal, but the buyers, I bet that deal is going to be sold again in the next 2 to 3 years because the rents in that market and that section, because of its location, are increasing pretty rapidly.
2 or 3 bedrooms?
Well, they actually had only a few studios, and then they had 1s and 2s.
1 and 2. So
yeah,
$2,000 a month average rent.
A little higher than that because of the location. Yeah. So it's just a phenomenal property. But then again, we had another property, which was 70s construction. That traded in Lauderhill, which is a little, of a lower income market.
It's a little poor area,
right? And that traded for under $150,000 per unit.
Right.
But really, I mean, a lot of these deals that we're selling, I mean, we're reselling them again in anywhere from 2 to 4 years.
So you're right, correct. So you're seeing the market coming back?
Yeah,
I know. Well, let me rephrase it. You see a lot of action.
We're seeing, in the last 6 to 8 months, we've seen a tremendous amount of action on all our deals. The way we usually process deals is, we'll take it out to market for 30 days. We'll take the top tier of buyers from there and then put them in through a best and final round. And sometimes we even do a best and final round 2 and 3 times if it becomes, more competitive. And some of the most recent deals, we had to go 2 and 3 rounds because buyers kept upping the pricing and terms and everything.
So you see those level of buyers from pre-COVID or?
Yeah.
Post-COVID, like you see, like more than one person?
Yeah, I think so. Yeah.
You see non-refundable deposits coming in?
We haven't seen a whole lot of the non-refundable deposits in recent days, but I'm sure it'll come back as the competition, continues to grow and people are getting, more accustomed to the new market that we're in as far as where insurance is and where interest rates are. I think, where we're seeing interest rates right now, it's probably going to circle around that kind of number for a while.
It's going to stay for a while.
Yeah, I think it'll stay for a while.
What about insurance?
Insurance is, was always a massive number. I mean, back in like 2 years ago, we lost some deals because insurance just came back at such massive numbers that it just killed the deal. Now we're seeing a lot of insurance has come down. Like
coming down
on some of the deals that we originally took out to market last year. We priced them out at over $2,000 a unit for insurance. Those same deals when we closed them towards the end of last year ended up coming into $1,700 a unit range.
South Florida?
Yeah, only South Florida. Yeah,
nice.
so we've seen the insurance come down. Yeah,
do that.
And we have a couple of insurance companies that we do business with and referrals to, and they kind of help us out prior to going to market and give us an idea of where.
They all go to the same place, no? All the agents go to the same place.
Yeah, I think so. Here for South Florida, yeah, there's one or two that.
There's only one or two.
Yeah, one or two of the guys that really dominate the insurance market.
What do you think about the governor wanting to do away with the property taxes?
If you think we're busy now, imagine what happens if that happens. That's I hear you say the next level. That's a big next level
Are you kidding?
For everybody in the state of Florida, and
will double and triple.
Yeah, and we're lucky. I mean, he's really for us and for businesses in Florida.
Right.
And I mean, just look what he did during COVID, as far as what he did for the state of us.
Amazing.
With everything, and we're lucky. I mean, when he was running, I was pulling for him, but I didn't want him to win because I love him here for our state and for our governor.
Good point.
But eventually, we're gonna, have to say goodbye to him. And hopefully someone else comes with the same kind of mindset that is very encouraging.
What do you think about the president? America's back or what?
Make America great again. I mean, you see everything that's going on, and the way I look at it is, it was such a mess before, so by coming in, he had to, take things with that mess and make adjustments, and with that adjustments, it's going to be coming down.
My only concern is those tariffs. Okay,
right.
He only has like another year.
Yeah,
till sometime next year.
Right.
November going to be a new election.
Right.
Not for president, for the for the House.
And for us, with Israel, you being from Israel and I having half my family in Israel,
of course.
I think as far as presidents goes, he's probably the best president for Israel that we've ever had.
Number one, the best.
And even my family in Israel, loves him.
So when I see Israelis, say, we don't like him, wish he was dead, I get really pissed off.
Yeah.
I mean, are you kidding me? You're Israeli and you should say that,
Yeah.
It's terrible.
Yeah.
Really bad. Yeah.
Yeah. I agree.
President is great.
I agree.
And for America and for everybody else, except right now, he took all we have in the House and the Senate, he took all the good people to his administration.
Right.
So we have a minority right now.
Right.
In the House and Senate, unfortunately, because those are good, good people, very smart in the administration right now.
Yeah.
So.
And everyone in our field, I mean, I would say 90 to 95% of people in our field are pro-Trump because of his support for our business. And
you want to pay the bill,
right?
No? Do you want to pay the bill, or you want to collect unemployment, or you want to collect from the government?
Right.
We don't believe in that,
right? No, I agree. I agree
100%. You believe in working hard, making the American dream alive, and pay your dues.
Yeah.
Right. Not else.
Yeah, I agree.
And I don't know why people are still. They just don't. I don't understand the other side.
Listen. Obviously, the stuff that he says and does, none of us agree upon. But he's a businessman, and so as a businessman, he's going to make sure that the economy gets to where it was 4 years ago when he when he took over and passed it.
Listen, I want to pay the bills,
right,
and save some. Okay, that's all.
Yeah.
The other guy, he was just not. It was freebies.
Yeah.
By the way, the immigration. You have a house. You live in over there in Palm Beach, right?
Yeah, Delray Beach.
Right, Delray Beach. If someone comes to your house, do you want to know who's coming in, or do you want to know who's coming in? Right?
Of course.
Same thing back to this country, the border. Don't you want to know who's coming in?
Yeah.
Open borders? Are you kidding me?
I know.
Right.
Yeah.
It's not practical.
Yeah. I mean, it feels good that we have a leader finally.
We have a leader.
We have a leader again.
And you know what? People respect him.
Yeah.
Putin respect him too, even though he doesn't agree and he hates him. He respects leadership. He respects somebody that can stand up. You know what I mean?
I agree.
And don't be a coward.
Yeah.
Being a coward is really the worst. Because remember, the whole world's looking at you.
Yeah.
And see what's going on here.
And he doesn't care what other people think. He just wants to get the job done.
That's all. He
that
doesn't
matters.
care about anything else, right?
No.
Right. Have you been to Israel recently? No.
No, we haven't been in a while.
In a while? How long?
A bunch of years.
Serious?
We have our kids have been there more than we have.
Oh, okay.
We have 3 kids. Our 2 boys have been there, through schools and different programs, and so they've seen the family over there more than we have. But we
Or in Israel?
so our whole family is in Karkur, which is right outside Caesarea, Caesarea,
Yeah.
and I'm very close with my cousins over there. My first cousin, he's one of the most famous Israelis.
I think you mentioned him.
He was the first Israeli to ever win the gold medal in the Olympics.
Right.
When they had the Olympics, 20 years ago in Greece.
Great.
And then this past year, he won the gold medal as the coach for the windsurfing team for Israel.
Oh, we'll have champions.
So his 2 gold medals for Israel were from him. One as an athlete, and then one as a coach.
We'll have champions.
Yeah. So the whole family is very close over there. They all have a big windsurfing shop right on the beach in Caesarea.
Oh, right.
And yeah,
that's one of the best places in Israel. Yeah.
yeah, we love there.
Oh, it's the best.
Yeah, with the ruins, and they have the windsurfing shop. That's where I proposed to my wife, 22 years ago.
Wow.
And our
You're
kids,
catching up. I'm 35 years.
35 years. Yeah, this past February we had our 21-year anniversary. So
How about it?
yeah,
Time flies, huh?
time flies when you have 3 kids and all over the place. Yeah. So,
The kids are big now, no? Almost.
so our oldest one is a sophomore in college.
Oh, okay.
Our middle one is a senior in high school, so he's going to be going to college next year. And then we have our daughter, who's going to be, she's in 8th grade, so she'll be a freshman in high school next year. So
Wait.
we'll be down to 1 child
One
in the
child,
house
and you're gonna be empty nester.
in 4 years.
In 4 years.
In 4 years, yeah.
And then what you're gonna stay here? Yeah.
We'll see.
What's your long term? You staying with the company for a while now? You're gonna stay with them?
Yeah, I mean, I'm going to be, in the brokerage business for a while, and obviously I have the kids in all the way through college. But yeah, at the same time, just like you and I did the deals in Gainesville, always looking to do some deals with clients, but I just won't do anything in South Florida.
No, you can't.
That's a market that that my brokerage business isn't. The other markets, I don't broker in those businesses in those markets. So I'm more free and feel more confident in myself to be able to invest in those kind of deals and in those markets.
What do you see price per door in Jacksonville?
Don't really know. I mean, we don't.
You don't really.
Yeah. I mean, our team is strictly South Florida.
South Florida.
Yeah. So I mean, I can name anything in South Florida and give it over to you. But as far as all the other markets, we monitor the markets, but we're not part of those markets.
Yeah, I think. I wish I can buy in South Florida when they're here by the ocean. And
Right.
I don't want to travel, but you know what? The opportunity is not here.
They are
very thin.
They are. The cash flow for the properties and the cap rates are lower than other parts of the country and maybe even parts of the state.
Right.
But it seems like they're turned around so much quicker than some of the other markets.
Right. I'm talking to people, as we have going live on Monday. So one person indicated something about is buying property, $21 million. They're asking maybe $80 million they're going to pay, maybe like 50 units. And maybe like 10 unit, for example, 10 unit, you can free rent. Everything else, rent control, And the problem here in New York, right, when you have a mixed bag, let's say like 10, 20% you can raise the rent, regardless, and the other 80% rent control or it's unstabilized, you don't have the good mix of people, if you know what I mean, right?
Right.
And the opportunity in New York are so slim.
Yeah.
New York, New Jersey, because I'm talking to the people and they're asking for advice, And I can see why people want to come to Florida. The market, free rent, bottom line,
right?
I mean, if you're a great manager, you can raise the rent as much, you know what I mean? It's unlimited.
Yeah, and the rents are moving. I remember right after COVID, back in 2020, even 2021, maybe even pushing into 2022, South Florida just had a massive rent growth.
Massive rent growth.
I mean, beyond. I mean, we were seeing 20 and 25%, even up to 30% rent growth on properties.
Right.
And obviously that has leveled off, and we're kind of seeing the back to the normal, 1 to 2, maybe 3%, depending on
no, it's
the
still
property
very high.
location.
No, the rent. I see the trend Central Florida to North Florida. People can't afford South Florida, to go up.
Yeah, the rents are incredible. I mean, for all the different product types, all the different properties that we sell, whether they're A properties, B properties, or C properties, the rents are just, are unbelievable.
I'm trying to underwrite small deals for the people. For example, as we went yesterday, 10 units, right, in Hollywood. Okay, they're asking over like $2.2 million. Okay, 10 units, average rent, $1,400. So the seller said, don't worry, you can go to 1,800.
So why isn't he doing it?
What's that? Exactly. Right. Not just that, you're charging you money together, okay?
Right.
And unfortunately, LoopNet, right? 10 unit, 15 unit, 20 unit, okay? And you can see, or 5 unit, okay? People are charging double the amount of market rent.
Yeah.
What market's supposed to be, not the rent.
Well, that's where you have to be careful. Probably those smaller deals where, if they're saying that you can increase those rents, on the brokerage side of it, for the deals that we're selling, we like to see it proven out. For instance, if we're selling a deal and you're saying you can go in and upgrade these units and put in, 10 or 15,000 a unit and increase the rents by $150 or $200.
Exactly.
He has to show that it's already been proven out.
But that same 10 unit, okay, let's say it was 200 unit, okay, and let's say you're overpaying for 200, 300 in South Florida. You're going to catch up the rent because it's a big community, right? You can make with 2 or 300 unit, okay, it's much easier than 10 unit.
Yeah.
You're overpaying for 10 unit, double the money.
Right.
A 2.2 should be 1.2.
Right, exactly.
Crazy, and people don't know, and they're overpaying.
Yeah.
And so my job is to tell people, okay, listen, don't overpay.
Right.
Okay. You want to start small, and that's okay. Now, the other alternative is to team up, with somebody, that has large complexes, okay, is a passive or in a GP or LP, but that's also, we need to talk about that to them, okay, but I cannot believe I saw like 3 different complexes. One was 15 unit, one 20 unit, each one overpriced, not rent overpriced, the price by 50 to 60% overpriced what the market should give.
Right.
Imagine like it's like a house. Let's say you own a house, okay? Like, for example, how much your house worth in Delray?
3.5
million, right? You're happy. You're not going anywhere, right?
No.
Yeah, taxes is good. If I give you 3.5, would you go? No. If I give you 7, would you go?
Possibly.
Of course you would go. You will run, okay? But pack the bag, I'm leaving, okay? Same thing with those people, okay? 10 units, 50 units, okay? Then it's not really for sale, but if you give me double the price, I'll get out.
Right.
So a lot of people, they get trapped with it, I'm going to be in South Florida. And, those are, by the way, very old, but 60s and 70s, okay? It's in flat roof, okay? It's not going to get any better.
Right.
Right? Now, but community, like you say, when you sell community, even like plantation, okay? It's a product.
Yeah.
Okay? You know what? It's real estate, okay? It's 2 or 300 units, okay? At the end of the day, there is a limit. You can't build it.
No.
It's so expensive, right? It's only going to go one way.
Below replacement cost you look at.
Right. And if rates goes down, it even goes up higher. Right.
And then when insurance keeps going down.
It will be, right. It's a matter of just holding on to it, collect cash flow, okay? But now for the small property are very difficult. It's just can't make money.
I agree. And you have to look at it the way you have to look at it is, how am I making money day one?
Exactly.
If you're not able to pay all your expenses, pay the mortgage, pay the taxes and insurance, from day one,
you can't.
Then it's not something that you can afford with.
Exactly. Another mistake landlord do, even big landlord, okay? They buy properties and they think they can use the cash flow to do the capex.
Mm-hmm.
That's a big mistake because you don't want to do that. You want to have a designated account at the closing just for capex.
Right.
And that money just for capex, not to don't take it from the operation. The operation needs to pay taxes, insurance, utility, management, employee. Okay, and that's a mistake that people do. Okay, when they get into it because they don't understand. Okay, it's not even 20 or 10 units. Okay, you can have capex.
Right.
Cash flow.
Yeah, you want to have that reserve account always available for
always.
God forbid something happens to the property or something just stops. You want to have that reserve account to be able to cover the mortgage and the.
By the way, Piccadilly in Point West.
Really?
Yeah. They changed the names. Okay. Tons of vacancies.
Really?
Yeah.
Wow.
Yeah. But whatever. Maybe we'll look at it again.
Sounds good. You never know.
You never know. You know what? It's I figured it out. Okay, you have to boots on the ground. Okay.
Yeah.
So when you're talking about a property that is a newer product, like 2010, 2020 Class A, it's not really. There is not too much upside. The upside is really getting the cash. Okay, and appreciation.
Right.
There's not much you can do. You don't need so much to have boots on the ground because it's a new product. When you have an older product, it's very difficult to cash flow.
Mm-hmm.
Yes.
60s
and 70s. So what you do, you're just gonna go add value, get out. And you have to have boots on the ground. When you have a third-party management, okay, it's like it's a freebie.
Yeah.
You're not gonna, like for example, we get 3 estimates. Anything over 5,000, I need 3 estimates. You have to.
Yeah.
So the only person who really care about you is the owner of the property. Okay.
Right.
the sponsor.
Yeah,
That's what they call boots on the ground, okay? And that's important, especially when you have
for sure.
the C-class.
For sure.
The money is really, the money really made at C plus, B minus.
Yeah.
That's what the big money is. You agree?
I agree, because that's really where you can add the most amount of value.
Right.
With the newer properties, maybe you go in and upgrade a certain minor things within the units here and there. But for the older product type, you want to go in and really maybe bring them to a different level. Especially because South Florida, there's so many, you know the stats. There's 1,000 people a day moving down to South Florida.
But by the way, people are also moving out, but not as much.
Not as much. Yeah. And the ones that are moving out are the ones that obviously you can't afford because they're
You can't afford. Right?
Yeah, I mean, it's very hard to buy a house right now, or a condo. And then even for the rents, like I said earlier, the rents that we're seeing for even our 70s deals that we're selling are just, you just shake your head. You're like, that's unbelievable. It's
Right.
they just can't
And
fathom
bank
that.
also loves multifamily. Banks, they love multifamily.
Yeah.
They don't care if the retail, office, and warehouses, industrial. Actually, industrial is a different animal.
Yeah.
But retail and offices, okay, it's like what 60% LTV, 65%. What do you see right now? Multifamily, 70, 75.
For LTVs.
Yeah.
Well, the agencies were really more seeing like in the 60-65% range, right?
For
right
bridge
now.
financing.
Yeah. Bridge financing, we haven't seen a whole lot. Back 2 years ago, they were really just priced out of the market, and Fannie and Freddie took over. Before that, the debt funds and the bridge loans
But
were
right now
more popular.
it's 7.5, 7 to 8% bridge financing.
Bridge financing right now, because we're doing one right now on a deal. We're seeing in the low 7s, high 6s
Really?
for
Bridge financing?
for a bridge loan. Yeah.
No way.
Yeah.
What's the LTV?
On the deals that we're looking at, they're looking at it on a loan to cost basis. They're looking to add, the money that's needed for the rehab. Yeah. So like, for instance, we're doing a deal right now. It's say it's a, $40 million deal. And, they're allocating about $1 million for upgrades to the units. So they're looking at about a 70% loan to cost, by adding that. And the rates are coming in the low 7s, high 6s, depending on where the LTV is going to be.
How's the lender?
Just bridge loans. Our debt team is the one that's sourcing it out for us on this most recent deal that we're doing.
And your debt team just also start other deal too, only your deals.
No, they do all the stuff that
anybody can call them and use them.
Yeah, I mean, most of the stuff that we sell, they're doing the financing on.
What I also want to do, I wanted to can tell the camera, okay, how to reach you, okay. If somebody wants 200 and 300, they can come to you.
Yeah.
Give you information, please.
That's
the idea.
Best is email, tal.frydman@nmrk.com. Tal is TAL .Frydman, FRYDMAN @nmrk.com.
Right.
That's for Newmark.
And I want to make mention, Tal Frydman is a top in his field, okay? You always, as a buyer, as a seller, you want to use a top agent, because what happens is, okay, you'll take the property, okay, and you're going to market it to the heck out of it,
right.
Okay, and then you're going to put a call for all offer, and Tal Frydman never take the first offer.
No.
Because they came to you.
Well, I sold you properties, and then we sold the properties for you.
Of course. So Tal Frydman will wait for, let me get another offer. Meantime, there's like 10 offers, okay? And the sellers, the buyer go crazy, because they don't want, it's like a moment, it's like you want somebody, right? And you have to run after
yeah.
right? So at the end of the day, okay, the buyer competing against each other, the last final round, okay, of a purchase price.
Yeah.
And you get the best of. That's what I mean when you work for your seller. You're great, for a seller, there's nobody else, than your company.
Yeah.
And you're part of it, of course, and personally, okay, we sold, I bought from you tons of stuff,
ton of stuff, yeah.
The
most recent deal we sold for you was Park Place, right?
Park Place,
Park Place
too.
Park Place we sold to you,
right?
When we had it on the market, and then less than 2 years,
234 units,
234 units, great
right.
Property. And then we sold it probably 2 years, maybe 2.5.
Right. And by the way, the partner at the time want to use somebody else. Okay. I'm like, okay, when you use somebody else, no problem. Let's see they're coming up at like $5 million less what I was gonna list for. I'm like, are you kidding me?
Right.
Okay. Look, hiring you or your company, okay, I can go and put in LoopNet, okay, right? Or sell off market. When they hire top agent, okay, such as you, okay, and your company, okay, they get the best of two worlds, because you know what, you add value.
Yeah.
Your job to add value for the seller.
Right. Right. We don't represent buyers. You know,
Right.
our company is strictly, you know, exclusively listing these properties.
So anybody in South Florida can reach out to me, to Tal Frydman, okay? I highly recommend them. Do not, Max Milchap is great too, but Newmark, you're in Newmark, right, is much better for bigger product.
Correct.
For 25, 30, 50, 60 million dollars, okay? And you really, I say you really give the best effort for the seller.
No, thank you.
That means a lot, yeah.
Appreciate it. And you can speak for it firsthand.
I speak myself, my experience.
Yeah.
Okay, I only share my experience.
Yeah.
Sometimes bad, okay, but it's good.
Well,
With you, it's all
I'm
good.
glad I'm on your good side on those deals. So